The Labor Department says U.S. employers picked up the hiring pace in March. Last month, they added 192,000 jobs, leaving the national unemployment rate unchanged at 6.7%. The good news is that 500,000 Americans started looking for work in March, and most found jobs. Let's take a closer look at what this means with Mellody Hobson, CBS News contributor and analyst. Mellody, good morning.
Good morning.
Pretty good number, but I think a lot of people after the winter weather expected a boost in hiring that we didn't get as much as we thought, right?
Well, that was the bad news. So the number came in at 192,000. Economists were expecting somewhere between 195 and 200,000. But the good news to me, it wasn't a disaster. It wasn't a huge fall off. We've seen a steady uptick since December. And the other thing to keep in mind, the numbers have been revised up 7 months in a row. So the February numbers were just revised up 20,000 jobs. So we might see that still happen next month.
We consistently hear that where jobs are added is really important. And it was interesting because in this report, we saw that it was temporary workers and healthcare workers. And another section really didn't have as many jobs as we thought have traditionally been added.
So private sector was the bulk of the jobs, which is actually very, very good. They tended to be more in the area of salaried jobs and higher pay. So business and professional services, healthcare added 19,000 jobs in the month. So that was good. That was a big shift from last year at this time, where we saw more hourly workers, restaurant, retail, in terms of where the jobs were higher. Where we didn't see as much new job growth was in the government area. So the people who want smaller government, I guess they're winning. But at the same time, there haven't been the jobs there that we've seen in the past.
And we should note that in March, private employment finally surpassed the peak it set right before the recession. So it's taken all this time to get back to where we were back in about 2008.
That's exactly right. And again, it's taken a long time, but I wore my turtles today because it's been slower than we all want, but steady growth. It really has been.
In January, we saw more than 1 million people lose some of their workman's comp. Is there a possibility that there will be some emergency actions to help those people?
Well, that's the big question. We're not hearing that there's a lot of energy around this right now, and it's going to be interesting to see what happens because 3.7 million people lost their unemployment insurance in January because we went from that extended unemployment insurance to 26 weeks. So that could also have an effect on the economy when those people do not have money to put into the economy. So it'll be interesting to see what Washington does on that issue. And those people need some relief.
We mentioned that a lot of people rejoined the workforce in March. That also means, though, isn't it, that the unemployment rate now is not going to go down as quickly, correct?
So that's something that, keeps the unemployment rate higher than maybe we would all like to see. People say, well, if you just pick up the pace of adding jobs, that's the story. It's not. This labor participation rate, that's something people are spending a lot of time thinking about. It's at a 3.5-decade low, meaning right now 63% of adults are participating in this workforce. Some have dropped out and stopped looking for a job because they're just so discouraged. When they see that the unemployment rate is dropping, they go back in to look for a job, and then they're considered unemployed again. And that keeps the unemployment rate higher than we might think.
On the other hand, it's good news that they think the market's getting better and they're coming back in.
That's exactly right. It's an encouraging sign.
It's always good to have you and Anthony explain business to the rest of us. Mellody Hobson, thank you so much.